Have you ever stopped to think about how much our world relies on money? It's everywhere, shaping our daily lives in ways we often don't even notice. It's honestly the lifeblood of our economies, the fuel that powers our businesses and allows us to exchange goods and services. Without it, our modern society would simply grind to a halt. But the way we use and think about money is changing rapidly, thanks to new technology and shifting habits. We're moving towards a future where physical cash might become, well, a relic of the past, replaced by digital forms of currency that exist only on our devices. One of the most fascinating and potentially transformative developments in this digital revolution is the rise of central bank digital currencies or CBDCs, which are making headlines around the world. CBDCs are digital versions of a country's official currency, issued and backed by its central bank, making them both secure and reliable. Unlike cryptocurrencies like Bitcoin, which are decentralized and operate independently of governments, CBDCs are directly controlled by the issuing country's monetary authority, ensuring oversight and stability. This connection to central banks gives CBDCs the potential to reshape our financial systems and address some of the most pressing economic challenges we face today, from financial inclusion to security. From soaring inflation to sluggish economic growth, the global economy is grappling with a complex web of interconnected problems. These challenges can feel overwhelming, but CBDCs offer a glimmer of hope, a potential tool to tackle these issues head-on. Let's take a closer look at 5 key economic pain points and how CBDCs might provide solutions. Firstly, there's the issue of slow economic growth. When economies stagnate, businesses struggle, and job creation slows down. CBDCs have the potential to stimulate growth by streamlining financial transactions, making it easier and faster for businesses to operate and invest. This increased efficiency can lead to economic expansion and job creation. Secondly, inflation continues to plague many countries, eroding purchasing power and creating uncertainty for businesses and consumers. CBDCs could help central banks manage inflation more effectively by allowing them to implement monetary policies such as adjusting interest rates with greater precision and speed. Imagine a world where central banks could implement highly targeted economic measures, such as adjusting interest rates for specific goods or services, to combat inflation with greater precision than ever before. This would allow policymakers to respond more flexibly to changing economic conditions, helping to address inflation at its source. This advanced level of control, made possible by the digital nature of CBDCs, could help stabilize prices and protect consumers' purchasing power more effectively. By using real-time data, central banks could react faster to inflationary pressures and make more informed decisions. Moving on to our third challenge, unemployment remains a persistent and complex problem in many parts of the world, affecting millions of people and their families. CBDCs could contribute to job creation by fostering innovation and growth in the rapidly expanding financial technology sector, opening up new career paths for a diverse workforce. As the adoption of CBDCs rises, new companies and job opportunities are likely to emerge in areas like digital wallet development, cybersecurity, and blockchain technology, driving economic growth and supporting local communities. Fourthly, high interest rates can stifle economic growth by making it more expensive for businesses to borrow money and invest in their future, which can slow down innovation and expansion. CBDCs have the potential to lower interest rates by reducing the costs associated with traditional banking, such as maintaining physical branches and processing paper transactions, making financial services more accessible. These savings could be passed on to borrowers in the form of lower interest rates, making it easier for individuals and businesses to access affordable credit and invest in their goals. The digital nature of CBDCs offers the potential for greater transparency and efficiency in financial transactions, reducing the need for intermediaries and streamlining processes. This streamlining could lead to lower operational costs for banks, which could translate into lower interest rates for borrowers, ultimately stimulating economic activity. Our fifth and final economic challenge is high public debt. Many countries are grappling with unsustainable levels of debt which can limit their ability to invest in essential public services and infrastructure. CBDCs could help governments manage debt more effectively by providing greater transparency into government spending and revenue collection. This increased transparency could enhance accountability, reduce the risk of corruption, and make it easier for governments to access financial markets and secure favorable borrowing terms. By leveraging the power of blockchain technology, CBDCs can create immutable records of transactions, making it easier to track government spending, improve tax collection, and reduce opportunities for fraud and waste. This increased efficiency and accountability could help governments manage their debt burdens more effectively. To fully grasp the potential of CBDCs, it's helpful to look at real-world examples of how countries are already exploring and implementing this technology. Let's delve into 3 case studies that illustrate the diverse approaches and timelines involved in CBDC adoption. First, we have the Bahamas, a pioneer in the CBDC space. In 2020, the Bahamas launched the sand dollar, becoming one of the first countries in the world to introduce a fully operational CBDC. The sand dollar aims to increase financial inclusion in this island nation, where access to traditional banking services can be limited, especially in remote areas. Next, we travel to China, which is at the forefront of CBDC development. Since 2020, China has been conducting extensive trials of its digital yuan, also known as the eCNY. These trials have involved millions of users and billions of dollars in transactions, providing valuable insights into the potential benefits and challenges of large-scale CBDC implementation. Finally, we turn to Sweden, a country known for its embrace of digital innovation. Sweden has been researching and experimenting with CBDCs since 2017, and its central bank, the Riksbank, is actively exploring the potential of a digital version of the Swedish krona, known as the e-krona. These examples highlight the truly global scope of CBDC exploration and the diverse motivations driving their development across different countries and regions. From promoting financial inclusion and expanding access to banking in the Bahamas, to modernizing payment systems and increasing efficiency in China, and fostering innovation and digital transformation in Sweden, CBDCs are being positioned as potential solutions to a wide range of economic and financial challenges. As we've seen, CBDCs have the potential to revolutionize our financial systems on a global scale and reshape the way we think about money. From combating inflation and boosting economic growth to creating jobs, supporting innovation and managing public debt, the potential benefits of CBDCs are significant and far-reaching. However, it's crucial to remember that CBDCs are still a relatively new and rapidly evolving technology. Thorough research, pilot programs, and careful consideration of potential risks and unintended consequences are essential to ensure a smooth and successful transition to a future where CBDCs play a central role in our economies and daily lives. I encourage you to delve deeper into this fascinating and rapidly changing topic and explore how CBDCs might shape the future of money, finance, and the way we interact with the global economy.